Hello and welcome to Green Investing. I'm Justin Urquhart Stewart of 7 Investment Management, and today our focus is on climate change, a threat far greater than just recession or the mere credit crunch. Government will provide a framework to tackle climate change, but it really will be up to industry and business to deliver the practical solutions. So to what extent will business step up to the plate, and what opportunities does that present to investors and business alike? Well, two people with a special insight into this subject are Mark Hoskin of Holden & Partners and Rob Bailey, Oxfam's Senior Policy Advisor on climate change. Mark, first, over to you. Well, you produce your annual report here from Holden & Partners, A Guide to Climate Change Investment. Looks like an excellent read in here. But what's your definition of actually what you mean in these reports as to what climate change impact's going to be?
Yeah, I think the first thing you have to say is that climate change is happening, and the scientific consensus is that it's due to human activity. What you do when you're looking at investment is to go back to the fundamentals and what's causing this. And we've identified population growth and industrialisation of the developing world as two of the key, if you like, drivers behind climate change. And if you throw in sort of national security issues, you have a bit of an explosive combination. And so you really go back and look at the stock market and break it down into different ways. And what we've done is we've broken it down into really the essentials of life, which we identify as energy, water, agriculture, forestry and carbon.
Right, and this is on a global basis, I assume?
Global basis, yeah.
Right. And so in terms of investing, are you actually looking at the sector, or you do drill right the way down into individual companies in there as well?
Well, what we do at Holden & Partners is we very much look at funds that are in this sector.
Right.
But we drill down through those funds and try and assess where the risks are in these funds.
And what sort of universe do you have to look at on that?
Well, it's a growing universe. It's really only been going for maybe 2 years as an area of investment. There are funds that have been around for a lot longer than that. And the new funds popping up all the time.
But I mean, I get the impression most of this tends to come out of America rather than here. Is that the case? Or where do you actually find these funds?
I think a lot of the companies are coming out of the US, but I wouldn't say necessarily more so than Europe. Europe's actually been very proactive on this. The European government has been very pro-environmental legislation. We haven't seen a huge amount of it in the UK, but generally the Europeans have been on top of this.
OK. Rob, from Oxfam's point of view, here you've got an interesting position of where you've got government policy coming one way and actually you've got the attitude of business the other way. Is there a point where these two actually work together well? Is there a sweet point here?
There's probably not a single sweet point, but there are various things that businesses can be doing on a case-by-case basis which are going to be good for the climate and good for shareholders as well, I think.
So, but in terms of other particular points where you would say, yes, that particular government's getting it right and there's more policy there. I mean, for instance, you see the initiative we got from Obama, you've seen the initiative we've had from Gordon Brown. Do you think these are actually going to get the right response from companies? Because at the moment we haven't seen a great deal of positive attitude coming from companies.
Well, companies will respond to incentives, and when the legislation is in place and the right incentives through a high enough carbon price are there, I imagine companies will respond. But actually, what we're seeing at the moment is that some of the most progressive companies are already taking action, anticipating these regulatory changes.
I was going to say, those that are waiting for the incentives, the bribes, the initiative to be able to do it. What about those that actually see this as a business, where actually they can actually grow something in advance? Where are you seeing those?
Absolutely. I mean, it can be any business. An obvious opportunity from a general business point of view is to increase energy efficiency. If you look at the example of Dow Chemical in the US, they undertook an energy efficiency program about a decade ago. They invested $1 billion in this, and since then they've achieved a return of about $3 billion. So there are opportunities all over the place for progressive companies. If we look in our home market here in the UK, look at British Telecom, they've undertaken a target to shift 25% of their energy mix onto a renewable basis by 2016. And there's a number of benefits that this could bring, not least isolating them from increasing market volatility.
OK. Mark,
I'll come back on that, actually. I don't agree that businesses themselves aren't focusing on this issue.
Right.
I think businesses are actually, in many ways, in advance, or many businesses are in advance of where society is. I mean, Toyota in 2006 spent something like $8 billion on their sort of environmental car R&D. So a lot of companies are all over this. A lot of companies are just PRing it, but there are a lot of companies spending a lot of money on it.
Yes, you can say you can get the sort of good PR coverage for it. But now, hang on, we're going into a recession here.
Yeah.
What's the opportunity for seeing some investment returns on here? This all sounds very nice and dandy, but at a time when you're going into a weakened economy, are companies actually going to come up and say, right, we're going to participate in this and therefore do so in a way which is successful, which investors can benefit from?
Yeah, I think if you're an investor, you've got to really think about where society's going. From my perspective, I think we could be in what they call an L-shaped recovery. It doesn't really recover, it stays pretty flat. And I think you've got to look at where are the areas where there's opportunity for growth, and there aren't that many around. Environmental is definitely at the forefront of the areas where government money, as you say, $150 billion by Obama, and that's just one thing that's happening, is being spent. And you've got to see which companies are actually going to benefit from this. And if cash flow is an issue, as it is for most businesses, where is the cash coming from? And if government's spending this sort of money on environmental business, then you've got to look at it.
OK. Rob, what do you expect companies to do? I mean, they can come up with business plans here. Where are the initiatives you expect to see from companies?
Well, I think the absolute first thing that companies need to be doing is understanding and measuring their own carbon footprint. So they need to know exactly how much emissions they're producing and from where. But that's the starting point.
Is this standardised measurement? Because quite often you get companies coming out with these figures, and I don't know about you, but I'm suitably cynical over a lot of statistics I see coming out of companies.
This is an issue for reporting and auditing, definitely. We need a standardised methodology for verifying and reporting, which brings me on to the second point, which is once that you've actually understand your carbon footprint, the next thing to do is to set ambitious and achievable targets and report against them. So interested shareholders and society at large can hold companies to account. But it shouldn't really stop within the walls of the company itself. Mm-hmm. Progressive companies will look beyond their own four walls to their partner organisations. So if we go back to the example of British Telecom now makes climate policies a criterion for selecting contracts with its partners. If we look at Marks & Spencer, the retailer, they've looked at their entire value chain from supply right through to customers, and they found that their emissions account for about 1/10 of the overall footprint. So they're now starting to work with their partners, garment factories overseas, to green those production facilities and reduce the emissions along the entire value chain.
But that's just Marks & Spencer's. Do you think this is actually going to be standardised throughout most of those retailers? And should government actually be forcing this?
Government needs to set targets, and one thing that we're hoping for to come out of Copenhagen at the end of the year is an agreement on climate change targets, emissions targets for advanced countries, which will start to bite after 2012, at which point companies are going to have to step up to the plate and start making those cuts in line with government policy.
OK, Mark.
I was going to come in on that, actually. I mean, carbon pricing is absolutely essential here, I think. The cap and trade thing that Obama hopefully will introduce in the States is going to force companies to actually change the way they operate, and it's going to hit them in the wallet. I mean, Drax, for example, one of our power stations in the middle of the country, in the first half of 2008, it announced 45% drop in profits because of cost of carbon permits, and coal price was higher, but that was in an area where electricity prices have been rising. So you're going to find some odd things in company profits coming out of all this legislation going on in the background.
In January, the McKinsey report came out, and that was actually saying that all of this is actually doable. Do you agree? I
think it has to be the case. I don't think it's an option. Whether government jumps on it quickly or not, it's not going to change what's going to happen. I mean, I think if you're investing in climate change, from an investor's point of view, you've got to think about what the opportunity for growth is. But also, really, you've got to think about, well, what happens if this goes wrong? What happens if London floods? What happens if you get hurricanes that blow out Florida for sort of months? It's going to have huge implications.
Doable and affordable?
I believe so, yes. What the science tells us is that to avoid dangerous climate change, we need to cut emissions from 1990 levels by at least 80% by 2050. If we look at National Grid, for example, in the UK, they've taken that target on before governments have, and they're well on the way to achieving it. I think it's absolutely doable.
Mark, finally, what's your advice for people wanting to invest in climate change? How do they go about it?
Well, I think don't be put off by the doubters. I mean, ask your fund manager or your stockbroker or whoever's advising you. But I mean, I really think that if you are going to invest for the long term, every stockbroker, investment manager should be thinking about the implications of climate change on their portfolio. OK, well, gentlemen, thank you very much indeed. Thank you, Mark Hoskin and Rob Bailey. And thank you also for watching. Until next time, then, good luck with your green investing and goodbye from me, Justin Urquhart Stewart. Goodbye.